Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up, little love for Libra on Capitol Hill. Fed Chair Jay Powell says he has, quote, serious concerns about Facebook's proposed cryptocurrency. Plus, IBM closes its $34 billion deal with Red Hat. Our conversation with the CEOs of both companies on the second largest tech deal ever. Plus, you will hear from the social network's global chief diversity officer. She tells us how Facebook plans to double the number of female employees globally over the next 5 years and why the company is setting such ambitious targets in the middle of a media firestorm. But first, to our top story, Facebook's plans to create its own cryptocurrency Libra aren't getting much love from U.S. lawmakers. And you can now add Fed Reserve Chair Jerome Powell to that list. Take a listen to what he told the House Financial Services Committee on Wednesday.
While the project's sponsors hold out the possibility of public benefits, including improved financial access for consumers, Libra raises many serious concerns regarding privacy, money laundering, consumer protection, and financial stability. These are concerns that should be thoroughly and publicly addressed before proceeding. Facebook has a couple billion plus users, so you have, I think, for the first time, the possibility of a very broad adoption. And if there were problems there associated with money laundering, terrorist financing, any of the things that we're all focused on, including the company, they would immediately, they would arise to systemically important levels just because of the mere size of the Facebook network. I just think it cannot go forward without there being broad satisfaction with the way the company has addressed money laundering, all of those things. There are a number of concerns that I listed at the beginning: data protection, consumer privacy. All of those things will need to be addressed very thoroughly and carefully, and again, in a deliberate process that will not be a sprint to implementation.
We discussed the future of Facebook's digital money with Joe Weisenthal, the co-host of Bloomberg's What'd You Miss, and Bloomberg Business Week's Max Chafkin.
The skepticism gets to the sort of general skepticism about crypto, and you kind of heard Jay Powell's 2 cents on that, plus the fact that Facebook just has so much power. And that's something that, we've all sort of been reckoning with over the last, basically couple of years, where they have this huge user base. They're able to push people into new products. And you could imagine if they aggressively tried to push people into this cryptocurrency, that could create a whole bunch of issues.
Joe, Powell is talking about Libra potentially posing a real threat to the global financial system, and at the scale of Facebook's size, any problems would be magnified. Is he right to be concerned?
Listening to Chairman Powell there, I was really struck by what I think is very clear is this is something that's on his mind a lot. I mean, as you mentioned, a lot of the lawmakers asking him about it, and I think in the past, when it came to cryptocurrencies or blockchain or other endeavors like this, you got the impression that they're like, no, this is something that we're watching. I think this is a little bit more than that. This is very serious concerns. Obviously, a lot of effort on the part of the Fed to really understand what they're doing and seeing if it passes muster. And I think there are reasons for them to be legitimately concerned beyond the sort of systemic nature of this. It does raise questions of, if this is going to be a much more efficient way to transfer money from person A to person B anywhere around the world, how can you really do that and also remain consistent with banking and payments regulations in all these countries? And I think there's pretty legitimate reasons to want to take a go slow approach to make sure that this isn't just some sort of regulatory arbitrage to get around the existing rules of payments.
Now, even though Jay Powell and the Feds are taking their time in examining Facebook's plans and cryptocurrency in general, it seems like not all lawmakers understood exactly what they were talking about, exactly what they were asking about. This was a exchange between Congressman David Scott and the Fed chair. Take a listen.
This Libra business is really disturbing. I think we all know Libra is the London Interbank Offered Rate. Very critical. It is apparent that Libra is going to leave us or be removed. The potential ramifications of the end of Libra as Libra's schedule end nears.
I think you said it very well. This is I think there are 300 trillion plus in contracts referencing LIBOR in 5 different currencies.
So, well, it looks like Congressman Scott laughing there at himself a little bit, getting Libra and LIBOR confused. But, Max, I mean, can we trust that lawmakers understand what they're supposed to be regulating here?
I mean, this kind of came up during Mark Zuckerberg's testimony, where you had these kind of super cuts of, we may have even shown some of them of sort of silly or kind of out of left field questions. And I think, that's Facebook is going to try to use that and sort of say, well, DC doesn't know what they're doing. On the other hand, like the fact that people are confused by this stuff and yet it does affect potentially billions of people suggests that we all should be educating ourselves more closely.
No, I have to know what your reaction to that moment was.
Well, it was a funny moment, and the question about LIBOR and the replacement is interesting. But I have a lot of sympathy for the politicians, especially on this topic, because think about it, like how many people have you and I interviewed who are in tech, or maybe even would describe themselves in blockchain or in crypto or in Bitcoin, that can't really articulate what makes the technology compelling? And it should be worrisome, and I do think it is a case for slowing down again, that if these tech companies think that they're going to reinvent the financial system while lawmakers are still struggling to wrap their head around what it is, that these kinds of exchanges say, like, slow down.
So, Joe, speaking of regulating, who actually does have the authority to regulate cryptocurrency, to regulate what Facebook is at least trying to do here and launch this thing in the next year? Is it the Fed? And it's obviously certainly not only U.S. regulators that will be concerned.
Well, I think, there's still is a real morass in terms of crypto regulation in the U.S. The Fed is definitely going to have a role in this, because Libra will interface with the banking system, because unlike most cryptocurrencies, there is going to be fiat money or low-yielding government bonds held in regulated financial institutions that back Libra. So there's no doubt that the Fed will have a role. But to your point, if it's going to be a global currency, they're going to have to, at some level, have to deal with regulators in every country in which they want to operate, which is why I think part of the appeal may be regulatory arbitrage. If they were just going to set up banks in all these countries, that would be a major headache. And you have to wonder if the crypto approach is sort of a shortcut around that. And if so, it's a pretty good reason for people to be concerned.
Bloomberg's Max Chafkin and Joe Weisenthal. Coming up, the president holds what he calls a social media summit, only it was missing the social media companies. But Tennessee Senator Marsha Blackburn did attend. We're going to hear from her next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. A federal appeals court said Tuesday that President Trump cannot block his critics on Twitter. The decision upholds an earlier ruling that Trump violated the First Amendment when he blocked users who were critical of his policies. Trump wasn't the only politician affected by this ruling. After the judge released his verdict, Democratic Congresswoman Alexandria Ocasio-Cortez was sued by 2 people she blocked on Twitter. And sticking with social media platforms, the Trump administration hosted a closed-door social media summit at the White House Thursday. Bill does a gathering to bring together digital leaders for a robust conversation on the opportunities and challenges of today's online environment. But here's the catch. Google, Facebook, Twitter were not invited. Instead, it was a guest list of various conservative lawmakers, organization leaders, and internet personalities, many of whom echoed Trump's complaints that social media silences conservative voices. We discussed the summit with one of its attendees, Senator Marsha Blackburn of Tennessee, who joined us on Thursday.
My biggest takeaway from the meeting is that you have a lot of people who utilize social media to get their message out and to communicate their stories. And what they're tired of is seeing social media pick and choose what they want to promote, what they want to prioritize. They feel like this should be a neutral platform, and they're looking forward to having Congress do some more work on this. They're also looking forward to the White House turning more attention to the issue of big tech and fairness in these platforms.
Now, Facebook, Twitter, the social media companies were not invited. How can you have a productive meeting without the companies in the room?
Well, actually, they're going to be included later. What the president did today was to hear from people who utilize social media. You know, Emily, one of the things I think is so important right now is that individuals do not sit down every day and watch the news at 6 and 10. What they do is to build their own network of different sources and channels, and sometimes they're streaming it, sometimes they're watching cable, sometimes they're getting notifications and alerts on their mobile device. And they have built their own network. What they want is fairness. They don't want one of the search engines going in and prioritizing everything that is in that feed. They want to have access to fair news. They don't want opinion journalism. They want facts. So when you have individuals who are creating that content, then it is important to hear from them. Now, I do understand, and as the president said today, he is going to invite these social media companies to come in and to have a meeting. And that is something that's taking place in the next few weeks. White House will have the date out soon, I am sure, and they'll have the opportunity to talk about what they're doing. One of the things that have been of concern to us is how some of these companies manipulate their algorithms, and that pushes forward certain content and then diminishes other, and is the exercise of a form of bias.
So do you think that the suppressing of quote-unquote conservative views, which is what you and other lawmakers and some of the folks in that room have been complaining about, do you think that's deliberate? Do you think it's inadvertent? Do you think it's an accident?
When Mark Zuckerberg was before us, when I was in the House, this was just about a year ago, I asked him the question, do you subjectively manipulate your algorithms? His response to me contained the information, well, you know, people live in Northern California that work with us, and they bring their worldview to work. And as we move toward artificial intelligence and machine learning, the biasing of these algorithms is something that is of concern to us, not only when you're talking about opinion, but also when you are looking at how machine learning will be self-replicating.
Now, some of the folks in that room have been accused of posting racist remarks, anti-Semitic remarks, spinning up conspiracy theories on social media. Is that the kind of thing you think should be left up on social media platforms?
Of course not. There is no place in a civil society for that kind of conduct, just as there is no place in a civil society for some of the postings that take place that are offensive or suggestive or are harmful to children. And all of these components for social media is speaking specifically to the reason why we need to put some guardrails in place for social media.
Speaking of that, you've been calling on Snap to take action to prevent, as you wrote in a letter to them, more children from being exposed to sexual predators and explicit adult content while using Snapchat, saying the fact that messages on Snapchat disappear actually it's a child predator's dream, is the way you put it. What are your main concerns about Snapchat in particular?
Main concerns about Snap, number one is their ratings. Being there for 12-year-olds and what is taking place on Snap, where the auto-delete feature on those videos. There are cases where predators, child predators, pedophiles have been arrested, convicted. They have used Snap to coerce and ensnare children, threatening to put their video on social media unless they send more videos. And this is something that parents need to have the tool to turn this off. There need to be explicit instructions for parents how to handle this.
That was Tennessee Senator Marsha Blackburn. Coming up, IBM closes its $34 billion deal with Red Hat. Our conversation with the CEOs of both companies on the second largest tech deal ever. And later in the show, Facebook is attempting to drastically increase minority representation in its workforce. How the social media company is tackling its diversity problem. This is Bloomberg. IBM has closed its $34 billion purchase of Red Hat, finalizing the world's second largest tech deal ever. IBM was once synonymous with mainframe computing, but has been struggling to adapt in a cloud-first world. The company is playing catch-up to market leaders Amazon and Microsoft in offering software and services over the internet. Bloomberg's David Weston spoke with the CEOs of both IBM and Red Hat on Tuesday.
Hybrid cloud's important because it's important to our clients. It is the destination for the cloud. You know, David, I think a lot of times people think of, well, everything's going to move to one public cloud. That is not what we see clients need, want, and are even targeted to. It is this idea that I've got an existing estate, like a house, I'm going to modernize it, and I have 5 to 15 public clouds already, private clouds, on-prem, and as I modernize an app, I'm going to put it where I want, and then I have to manage and secure all that. That is the destination, and for the next generation. We give them now a platform between Red Hat and IBM that runs on any public cloud, that runs private, that runs traditional, and they can write an app once, run it anywhere, secure it, and manage it. That is a distinct and unique capability, and that's what I mean by the hybrid cloud, and that does make us the leader in that. Others talk it, but they may have just a connection between their public cloud and their private cloud. This now allows us to be multi-cloud everywhere.
Well, as Ginny says, Jim, you got some other competitors out there in the cloud, not hybrid cloud, but the cloud, that are pretty darn big. People like Amazon and Google. How is this going to help you catch up to them, or is that even the goal?
I'll start for the Red Hat component. Look, our goal is to be an even better partner with those clouds.
That's right.
They are great partners. Our software runs on those clouds. It runs on premise. It runs on IBM's cloud. It runs on those clouds. So they will continue to be great partners for us. And as we are capable of moving many more workloads onto our software platform, that's more workloads that those clouds can actually go and address and run. So my conversations with the major clouds have been very, very positive because they see this as an opportunity to get more workloads out of data centers running on their clouds.
So think of that. That's a really important reason to do this for us. Our clients want us to be able to take our platform and run it anywhere. So these are both partners, and we cooperate or in competition on the other side.
Ginny, you've ramped up the IBM percentage of your revenue from the cloud dramatically, from something like 4% to 25% in a reasonably short period of time. What's the ultimate goal? Where will this get you to?
Well, look, not that there's an ultimate goal. As you think about the clients moving their work, 80% of their work is going to move to the hybrid cloud. So this will continue on. And again, when we look at our revenues, it transcends everything from our public cloud, our private cloud, now these platforms that'll be on other clouds included, and our services revenue. So it isn't that it's a goal, it's to move with the same journey that our clients need it to move with.
And what about moving, Ginny, what about moving with the overall size of the cloud expanding? How much of this will just be riding with the cloud up, and how much will be actually taking market share from other cloud providers?
Yeah, so look, for IBM itself, one way to think about this is 200 basis points of revenue growth, CAGR, over a 5-year period. And so this is what Jim just said a minute ago. The important part to think of it is our own cloud, the IBM public cloud and our private cloud together, should be the very best for mission critical work. Clients, though, as I said, have 5 to 15 clouds already. So we also want to have our platform running everywhere else. So as far as I'm concerned, growth anywhere is going to be good for IBM then.
Yeah, and to emphasize that, this is all about helping our clients provide more value to their customers, right? So when a client builds a new application, a new website, a new mobile application, the opportunities for us to participate, whether it is helping them build the application, helping them integrate that with data, having it run on our platform, having it run on IBM's cloud. Any of those components are, areas of incremental value that we can, participate in as our customers create more value, for their customers.
That was Ginny Rometty, IBM CEO, and Jim Whitehurst, the CEO of Red Hat. We continued our discussion of the mega deal with Bloomberg Tech's Olivia Carville on Tuesday.
If you think about IBM's history, we have a 108-year-old American icon that has largely been known for its mainframe cycles. And in the last couple of years, they've been trying to reinvent themselves. This acquisition of Red Hat is essentially IBM trying to re-enter the cloud space as a totally different company. It's trying to transform what it's been providing so far and change the game. We've heard IBM CEO Ginni Rometty earlier call this a game changer for IBM. And it's important to think about why this is going to be so significant for not only IBM but for the wider cloud space, and also for other cloud providers like Amazon, Microsoft and Google, who will now be seen as partners to IBM rather than rivals.
Interesting. What are some of the risks to this new strategy, and what could go wrong?
I think that one of the biggest risks here is whether or not Red Hat will really be able to fold into IBM. This company is known to have a staunch and old school corporate work culture. So will this open source Linux providing company called Red Hat, which has been known to be a bit of a renegade and revolutionary in this space, really be able to come into the IBM family? We've heard Ginni Rometty and Jim Whitehurst, the CEO of Red Hat, talking about how within this acquisition, Red Hat will remain independent. It will remain a distinct unit within IBM. So it will have its own consulting services, its own sales, its own terms and conditions. The Red Hat leadership team, including Jim Whitehurst, the CEO, will remain within Red Hat, and they'll be able to talk to their own clients rather than through IBM. So they're hoping that in order to maintain Red Hat's independence, that this integration will really work seamlessly.
We've heard Ginni Rometty use these words, hybrid cloud, before, and in fact talking about it for the last several years as they've tried to navigate this transition. How is what IBM is trying to do different than what Amazon Web Services, Microsoft, and Google do with their clouds?
Right, so Amazon, Microsoft, Google, they all provide different public cloud networks that have particular kinds of strengths. Like Amazon's strength, for example, is its infrastructure services, or Salesforce's cloud strength is its customer relations management platform. And you see companies that are kind of buying into these services and using these clouds for different types of reasons. And what IBM is attempting to do is to become the glue that will stick together or connect all of those different clouds onto one platform. So you may be a company that needs to use Salesforce for a particular reason and needs to use Amazon for another reason. And that means that you may end up with up to 15 different cloud providers who all operate independently in different silos. And you have no way to actually bring them all together. IBM is hoping that it will be able to become that connective tissue that in essence aligns all of these different clouds under one platform. And one of the really interesting things here is that this idea, this kind of strategic move to become partners with some of these former competitors like Amazon, Microsoft or Google is what IBM actually did back in the 1990s regarding its global business services platform. It kind of partnered up with software providers and said to them, we'll allow you to run your applications smoothly on our hardware. We'll partner with you rather than compete against you. And that's what saved the company. So they're really trying to do the same thing again.
That was Bloomberg Tech's Olivia Carville in New York. Coming up, Facebook has ambitious plans to improve diversity, but are they realistic? Facebook's global chief diversity officer tells us how the company is planning to boost numbers next. Welcome back to the best of Bloomberg Technology. I'm Emily Chang. Facebook has set big goals to boost workforce diversity. In its annual diversity report, the social media company announced plans to double the number of female employees globally over the next 5 years, as well as the number of Black and Hispanic employees in the United States. The company also said it wants half of its U.S. workforce to be from underrepresented groups by 2024. We sat down with Facebook's Global Chief Diversity Officer, Maxine Williams, Wednesday and asked why they're setting these goals now.
There's been research done by very credible institutions to say that having goals is one of the ways in which you drive change. The Kapor Center, in conjunction with Ford Foundation, has done a lot of work, the biggest study on why people leave technology. And they've seen that having goals makes a difference. It's one of the 5 things you should be doing. And we want to do what is best practice. We've been building for the last 6 years the machinery, the muscle, the strategies, testing things. Some things have worked, some things have not. And we feel we're in a place now that we have that muscle to really put these goals on top of it and boost even further.
But you're looking to change absolute numbers. You're looking to get to 50-50 globally when it comes to men and women. Do you have some secret innovative plan that we don't know about that's going to make this happen in 5 years?
I wish. Then I would market that and never work again. No, we don't have a secret plan. None of this is some sort of magic thing. This is like hard work, consistent attention, every day being deliberate. Inequity did not come about through some sort of organic weird thing. It was designed. So we are hoping that if we could also design deliberate interventions, it's getting better at what we now know after 5 or 6 years of trials does work. Getting better at that with these goals, we hope will then, it's going to be hard. Let me just be clear. Those goals are stretch goals. So I'm not saying by any stretch of the imagination, as I said, oh, we're going to hit that. No, but everywhere in the business, we set 50-50 goals. 50% chance we'll hit, 50% chance we will not. And we're going to push on this to get as far as we can to that 50.
Now, Facebook's numbers, to be fair, are fairly average compared to the tech industry. And I get asked a lot, even with Sheryl Sandberg's leadership, who is a leader on women's issues in the world, why can't even Facebook do better? Why hasn't even Facebook done better?
Yeah, I think it's about, there are a couple of things. One is that there's a lot of stuff that we do own, and we have doubled down to try to address that. Things like, is there bias in the workplace, right? How do you evaluate people? Is there fairness there? How are you considering promotions? All of that we are working on and we own.
And you say that there is bias, there is unfairness.
Everywhere, everywhere. And what you need to do, this is why I say humility is important for every company, for every group of people, to recognize that we're not special. There is no fairy dust that we sprinkle on people when they walk through the doors at Facebook. They are those same people that they are when they got up that morning and got ready in their communities, right? Everybody has bias. So you address that. But on the other hand, having a leader who does model it helps us tremendously. So that seeing that you could, there's this expression, you can't be what you don't see. And seeing a woman who represents what we hope for, which is leadership and influence and success, has been useful. And that's why we have seen our women in leadership numbers have been the most improved of all.
Now, you also report the number of women and minorities in technical roles because those are important prime decision-making roles, decisions about the product that is used by 2 billion plus people around the world who come from all backgrounds. Now, if you look at those numbers, women hold only 23% of those prime technical roles. Blacks and Hispanics 5%. Could another goal be getting to 50-50 in those roles someday?
So this is where, remember when I said there's stuff we control and there's stuff we don't control, right? We are 100% focused on what is our environment, what are the opportunities, how we train, how we're looking. We've expanded the number of internships by many factors in order to get more in. But when you are pushing against a situation where only 18% of the people graduating with computer science degrees in the United States are women, how do you get to 50?
So that sounds like pipeline problem, which many people would like to say is a myth. There isn't just a pipeline.
There isn't, and that's why I start by saying there's stuff we own. And we need to make sure we deal with the stuff we own. Are we being fair in promotions? Are we creating opportunities? Are we weeding out bias? All of that. But when you say, can you get to 50%? So we've increased from 15% 5 years ago to 23% women in technical roles. We have surpassed what would be an obvious market availability number of 18% graduation rates. How much more can you do, right? So I'm just going against could you get to 50? And I'm saying to get to 50, we need to have a lot of comprehensive work, and we do some of that work investing in the long term as well to get more people from underrepresented backgrounds doing technical subjects, studying computer science and computer engineering, data structures, algorithms. And so we work with universities, we build tools so that people can put in there something called tech prep. You can put in your zip code and see where you can get training in your neighborhood, right? I think it's like all systems go to get us to that 50.
Now, I've made the argument that privacy, digital privacy, is a women's issue. It's not a women's only issue, but it's an issue like healthcare that women have a unique view on. And if you look at the studies, women are more likely to keep their profiles private, perceive more risk online than men. And it's pretty obvious that most of the product decisions at Facebook for many, many years were made by mostly men. Do you think that Facebook would have issues around privacy in particular, so many issues, if there had been more women at the table from the beginning?
I think you don't know what you don't know. So always, our key thing is having more diverse perspectives, having more cognitive diversity on every team is going to produce better results. And we have seen examples already, now that we are increasing the diversity of our workforce, of how decisions are changing and how products are improving because we have those different people there. So I'm going to say baseline, yes, everything is going to be better if we have more diversity.
We interviewed a former Facebook employee last year who said, African-American, said Facebook has a black people problem. And it doesn't just affect black employees, it affects black users. The NAACP last year called for a boycott of Facebook when they learned that, when it was discovered that Russians used Facebook to target African-Americans specifically in the 2016 elections. What's your response to that?
My response is that there will be a distribution of experiences and of responses to everything. My response is also that in people issues, there's always going to be a complexity, which what is required of you as a company is to look at them head on and to constantly be trying to improve, to take responsibility for the things that you can change. There are many people who would stand up and say, I have an amazing experience at Facebook. That doesn't mean that the person who says they didn't was wrong. It means that there is a range. And when I say that what I think we're responsible for is to getting to consistent execution, to have the best we can get, I think that's what we need to deliver.
And will you admit that this impacts the product? This impacts the decisions that are made?
The level of diversity?
Who's making
Absolutely. That's why we're doing this. We're not doing this for some beauty competition on how many numbers we have versus somebody else. What would be the point of that? No, we're doing it because it absolutely impacts every decision. The research is that when you are trying to solve complex decisions, the more diversity you have, the better solutions you will develop. Everything we do is complex if you think of the scale we operate at and the meaning it has in people's lives to connect to other human beings that matter to them. And we want that experience to be as good as it can be.
Now, this goal, though, it's really exciting. It does put another target on Facebook's back in the middle of, just today, the Fed chair criticizing Libra, lawmakers skewering your cryptocurrency plans. You've got fake news, misinformation issues, hate speech. You're dealing with a pending fine from the FTC, a pending potential antitrust investigation. Why put another target on Facebook's back when, like you said, 50-50 you succeed, 50-50 you don't?
Because I want to succeed. I don't know that you achieve much if you risk nothing. And if there is criticism to come, then I'll be proud to take that criticism if it was in the interest of us getting to the excellence we want.
That was Facebook's Global Chief Diversity Officer, Maxine Williams. Coming up, shooting for the stars. Our conversation with Richard Branson and Social Capital CEO Chamath Palihapitiya on their plans to list Virgin Galactic on the public markets. What it means for the race into space. Next. This is Bloomberg. Houston, we have a listing. Billionaire Richard Branson's Virgin Galactic will become the world's first ever space tourism venture to hit public markets. This after receiving an $800 million investment from Social Capital Hedda Sophia, a publicly traded shell company that was initially set up to someday merge with a private company in order to take it public, an alternative to a traditional listing. Branson and Social Capital founder Chamath Palihapitiya joined Bloomberg Tuesday.
When we sadly couldn't go ahead with the Saudis, I decided that I would fund Virgin Galactic to profitability myself through the Virgin Group. And then we got a call from Chamath, who said that he was keen to have a look. And he went to see our space people, spent some months looking into it, and why don't you carry on from there?
Well, I mean, I'd been an admirer of the business from afar, and then we had a bunch of mutual friends who were early customers. So I was always wondering what's really under the hood, and when I got to see the business, I was pretty floored, quite honestly, about what they built and the quality of the business that it would become, and so it took us 9 months, but we got here.
And you were going to be chairman of the board with a $100 million purse personal investment as well. So Richard, did you talk with other funds? Did you look for other backers in Asia, for example, or in the Middle East?
No, yeah, as I said, I mean, we did have the deal from the Saudis. That was not possible, and you know, if we were to actually take this public ourselves, it would take a long time. So I think the Chamath's approach seemed to work very well for us.
Chamath, was this the last roll of the dice for you? My understanding is that the fund would have had to return investment money in September. Richard talked about the fact that this has been 9 months in the gestation. You were cutting it a bit fine, weren't you?
I don't think so. You know, we'd met more than 200 companies over many countries over the last 2 years. It did take us 9 months to do the diligence required to really get under the hood and understand what they built and to feel comfortable across all aspects of the business. Could we have done another one? Sure. Could we have invested in something else? Yeah. But I think that we found the absolute best company, something that'll thrive in the public markets, and frankly, something that's going to capture an enormous amount of consumer interest, giving the average person a chance to own a bit of space. And I think there's, frankly, nothing more exciting than that.
Richard, the average person's going to own a bit of space. When is the first flight going to be? Let's try and nail that down.
Now that we're a public company, I'm going to have to be very circumspect in what I say. So what's happening at the moment is we're moving the whole operation to New Mexico, and that's where the spaceport is. We're moving our rockets there. We're moving our spaceships there. We're moving our motherships there. Then we'll do a few final test flights from New Mexico in the new situation, and then I'll go up, and then the public will go up. I'm not going to give a specific date because I'm told I'm not allowed to, but we've had 2 very successful flights into space recently. We've made 5 astronauts, the first 5 astronauts to be made in America since 2009. So we're after 14 years of hard work getting this far, we feel we're on the verge of something very special.
Now, it's very exciting because you specialize in suborbital flight, slightly different from Jeff Bezos' outfit and also Elon Musk's outfit. They're looking at slightly other segments of space, if you like. 56 miles above the Earth and 3 times the speed of sound, which you have now hit. You did say that you'll go up in 2019. Will you?
If our brave test pilots are ready to say to me they've now tested the craft through and through, I will go up when they tell me to go up. But whether it's by the end of this year or slips into next year, we'll see.
How many customers have paid, $250,000? What's it up to now?
So we closed out booking people 5 years ago because we had 600 customers. We got $80 million on deposits. Since the test flight, we've had 2,500 more people saying they want to come in. And our research indicates that there's a very large number of people.
This is an incredibly capacity-constrained market. Just servicing the customers we have will take 2.5 years. Once you convert some of these 2,500 people, the first 3 or 4 years of operation is already mostly spoken for.
That was Richard Branson, Virgin Group founder and Social Capital co-founder and CEO, Chamath Palihapitiya. We continued our look at Branson's interstellar plans with Bloomberg Businessweek's Max Chafkin.
Social Capital raised money from investors to basically acquire a private company and in doing so take it public. And the pitch that we heard from Chamath Palihapitiya was that basically this would be a much more efficient way to go public. He was saying when he started talking about this a couple years ago, it was that the IPO process is broken, it takes too long, there's too much regulatory oversight, so this would be a thing he could offer private companies. And I think it kind of makes sense for Virgin Galactic because Virgin Galactic, you're talking about, extremely high potential. I mean, this could revolutionize air travel. It could be the new Disney World. It could, we could all own a piece of space. On the other hand, it's super speculative, and it's the kind of thing that I think will be is potentially hard to value, and you can see why it might make sense to go public in this.
Right. On the other hand, it could never happen or could not happen for 100 years. Yeah. So how big a milestone is this that a space company that's never taken a person into space is going to very soon be officially a publicly traded company.
I mean, when Branson and his partners started talking about this about 15 years ago, and they had this first test flight, I think it was in 2004, the idea that private space was going to be like a big industry was kind of a joke. I mean, there were a few people, Elon Musk, I think, was just at the beginning of SpaceX. This was going on, but it was very niche. So having this happen, you know, having a privately held space company go public, I mean, it's a big deal. We should also say that Virgin Galactic has had test pilots in space, so it's not like they've had no humans there, which is different from the Jeff Bezos and Elon Musk companies. Now it should be said, though, that the kind of space travel that we're talking about is not like going to the moon. It's like going to space for a few minutes. You're going just to the edge of space, experiencing weightlessness, and then coming down. So it's sort of in between, you know, a trip on the Soyuz, which is currently the main option for private space travel, and the idea where you take a 747 and they sort of dive bomb for 60
or
or 90
the Tower
seconds.
of Terror at Disneyland.
Right, exactly.
Something like that. Now, how does this give Virgin Galactic an advantage over SpaceX, over Blue Origin? Does this give them more flexibility, more visibility at all?
I mean, I don't think especially. I mean, I think SpaceX is a huge valuation, much higher. I mean, it's a private valuation, so that's different, but I think it's somewhere around $30 billion. They've got, you know, billions and billions of dollars in government contracts. That company is well positioned. Blue Origin obviously has the pocketbook of one of the world's richest people, or the world's richest man. And so those companies have nothing to worry about. That said, Branson obviously is a wonderful marketer, and I think you know, being public and having that additional outlet for his sort of doing his thing will probably help the company.
Bloomberg Business Week's Max Chafkin. Still ahead, a sky full of satellites. Companies already filling our orbit with plans to launch thousands more satellites to bring internet to everyone. But how will they clean up after them? That's next. This is Bloomberg. You'd think in today's day and age, everyone would be online, but that's just not the case. According to the United Nations, nearly 4 billion people worldwide lack reliable internet access. And companies like Amazon and SpaceX are trying to remedy that by launching thousands of low-orbiting satellites to try and get everyone online. But as astronomers see it, it's not all clear skies.
Starlight, star bright. Wait, is that even a star I see tonight? High over the Netherlands in late May, objects in a train-like formation trail across the night sky. Not stars, not planes, but satellites. You can expect more scenes like this one, which had skywatchers head-scratching, as the satellite race heats up with many more launches on the horizon. Elon Musk's Starlink program plans to propel nearly 12,000 satellites into orbit. Jeff Bezos' Project Kuiper has asked the FCC to approve roughly 3,200. And private company OneWeb has said it wants to launch 30 satellites a month by December. The goal for most of these devices to bring broadband access to the roughly 4 billion people on Earth who don't yet have it.
I think you can see going forward that access to broadband is going to be very close to being a fundamental human need.
While that goal may seem noble, these satellites are designed to fly lower, leaving astronomers concerned they'll interfere with the observation of distant galaxies. And then there's the cost. The first OneWeb satellites cost nearly $1 million each to produce. It cost as much as $16.5 million just for SpaceX to launch 60 satellites into orbit. Still, investors are rocketing forward. $1.7 billion was invested into space companies in the first quarter of this year alone, according to the VC firm Space Angels. That's nearly double the amount deployed a quarter earlier. So with these satellites, the space economy, so to speak, appears ready for takeoff.
We continued our look at how these new waves of satellites can bring the entire world online with one of the companies you just heard about. Adrian Steckel is the CEO of OneWeb, a satellite company that's raised nearly $3.5 billion to date and is backed by SoftBank, Airbus, and Richard Branson's Virgin Group. He joined us Wednesday.
We're launching satellites starting in December, 30 satellites a month, 34 per month, sometimes 36. We'll have our first phase of our system giving global coverage by the third quarter of 2021, and we'll be giving service in some places in 2020. Our promise is low latency service and global coverage. And one of the things that happens right now with satellite is that people get really clunky service because of the high latency. It's just physics, right? The GEO satellites are 36,000 kilometers away. Ours are 1,200 kilometers. And everybody in the world deserves to have the best internet service, whether you're in the middle of Africa, Asia, Latin America, or in the heartland of the United States.
So what about the cost? It's been difficult to calculate the cost of the SpaceX satellite launches, for example. How much does it cost now to launch a single satellite, and how much will that cost come down in the future?
Well, I mean, one of the things that's been very exciting recently is the launch costs have come way down. And so we locked in our 22 launches. We did that a couple years ago. And we know that from then to now, the launch costs have come down about 30%. The rockets are getting bigger. And that means that they can carry more satellites. They're more secure. So we're looking at that trend to continue. And that enables a lot more satellites to be launched. Also, you're seeing CubeSats go up. Ours are not CubeSats. Ours are the size of fridges, so about 150 kilograms. The SpaceX ones are about 220. And people very much focus on a satellite, but a satellite is not a unit of measure. It's like a base station. It could be bigger or smaller with more or less capabilities. But in your segment, you talked about us bringing down the satellite cost to $1 million per satellite. You got to remember that it used to be that satellites would cost about $150 to $200 million and be these big things. And so what we've done is we've taken advantage of all the advances in electronics from the smartphones in miniaturization, and we've applied an industrial approach, which is to say we're doing this on an assembly line, that our factory is opening in Cape Canaveral on July 22nd. And so that coming down to $1 million per satellite is a big, big deal.
Elon Musk has tweeted these thousands of satellites that are already in orbit. People see them approximately 0% of the time. That said, what about the concerns from astronomers about space pollution?
The most important thing is collisions and being responsible with space. I think one aspect is the visibility. Our satellites that are a higher altitude, where they're at 1,200 kilometers versus their satellites are at 550, so ours are not visible. And then the other thing that you really have to pay attention to, that we're working with governments and we're very much thought leaders on this, is making sure that the satellites disintegrate when they come back into the atmosphere, and so that you don't harm anybody. And then if you and I get into a collision on the street with our car, we walk away from that. If you get into two satellites collide up there, they'll fragment, and then they sort of pollute the area. So really very, very important to be responsible up there in space.
OneWeb CEO Adrian Steckel. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. You can tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. And we're live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.